Hello and welcome to another edition of Paydirt Remote. I'm Dominic Piper, editor of Paydirt. Today I'm joined by John Welborn, Managing Director of Resolute Mining. John, thanks for joining us.
Well, yeah, nice to see you in these strange circumstances, Dom, but we're all getting used to Zoom, so nice to see you too. Congratulations on the virtual background.
Thank you very much. We've worked very hard to build this studio virtually, so it's coming along quite nicely, I think. John, it was a very impressive quarterly report. I was particularly interested to see that Syama has rebounded. Production there has rebounded after the roaster problems you had last year. Is this Syama on the way back to full production now?
Well, we headlined the quarterly activities report with the fact that we'd achieved record tonnages from the Syama underground mine. Which was great. And there were some really promising signs for the Syama sulphide operation. And this quarter will be better again. So it's certainly a work in progress. We poured 21,000 ounces from the Syama sulphide operation. That circuit should be producing 40,000 ounces. So we've still got some improvement in front of us. There were a lot of promising signs in the March quarter, and we're looking to step up recoveries in June. And then demonstrate that the underground mine that we've now got fully operational, and particularly that sub-level cave, will produce sustainably those expected numbers.
You also mentioned in the quarterly report the PFS for going underground at Taba, which is currently an open pit mine. How important is Taba to a long-term Taba to the long-term future of Syama?
Well, it's an exciting opportunity for us. We are going to publish a feasibility study around the middle of the year. Taba underground represents a second long-term ore source. We believe that that high-grade material, we've got 1 million ounces there at 5 grams in a resource we published last year, could be another long-term, 10-year plus mine for Resolute. And that would allow us to achieve our ambition of Syama being a long-term 300,000 ounce a year mine.
Moving Taba underground, would that signal the sort of the end of the oxide material at Syama? Have you exhausted all opportunities there?
We certainly haven't exhausted all opportunities, and we published some exploration results last week, which are really exciting. And we control 80 kilometres of the Syama belt, much of which is completely unexplored. So we certainly haven't come close to exhausting the potential for further free milling oxide deposits. That's the good news. To be more realistic, the chance of us finding a really significant near-surface oxide deposit is probably quite limited. As I often refer to, people have been looking for this part of for gold in this part of the world for thousands of years. The richest man who ever lived was a Malian in the Middle Ages. And so while we've got lots of targets and we've identified a series of satellite pits that we can mine, the chance of a really long-term large pit close to the mill has probably been exhausted, and that's why we've been exploring the opportunities for a second long-term ore source.
Great, it's exciting times ahead at Syama, obviously. Then I just want to have a chat about your second African operation, Macko gold mine that you bought in Senegal as part of your acquisition of Toro Gold last year. Are you happy with the performance and how that's running at the moment?
Martin Horgan, who discovered and developed that mine and is now the CEO of Centamin, as the founder and CEO of Toro Gold, told me years ago that what was on the tin is what's in the tin at the Macko gold mine. And looking at our quarterly report and seeing the performance since we acquired in the middle of last year, the March quarter represents the third quarter of our ownership, and it's been incredibly consistent. 44, 43 and 42,000 ounces respectively. So we're very pleased with it. It's very consistent and it's performing well.
But you've also divested the last of your Australian assets in Ravenswood in Queensland. What Australian gold is flying at the moment. What's the rationale behind becoming all African?
You're right that there's a lot of competition in the Australian gold space, and we're very proud of the achievements we performed at Ravenswood, particularly the Mount Wright underground mine. But it did represent the lowest grade resources and reserves on our balance sheet and our highest cost operation. But certainly our operating model now does focus very much on the support for our African footprint. And I think internally that's a strength. And it also allows investors to look at Resolute for what it really is, which is an African-focused vehicle. We believe there's a strong investment premise around the availability of gold. As you're seeing with predictive discovery or some of our investments in juniors, it is an incredibly exciting exploration space. Our business model, obviously at Syama, we've got a long-term mine, and at Macko, we're going to make a lot of cash there over the years to come. But we're also very interested in doing what we've done for 20 years, which is either exploring or acquiring very cheap ounces. You know, our exploration cost is in the tens of dollars an ounce. And then we can acquire ounces for, you know, a couple of $100 an ounce, like the case of Macko, and then extract them currently at a margin of $500 or $600 an ounce. That's a great business. It's one we'd like to build, and that's why we're focused in Africa.
Africa comes with its own challenges as well. I noticed that for the first time this year, you've really stepped up your sustainability reporting. Can you tell me the rationale behind that? Why the increase in sustainability reporting now?
Yeah, thanks. In fact, you know, we've just sent out to our shareholders our annual report, and it's a lot thicker than it has been previously, because we have included a separate sustainability section, and it's intrinsic to any miner's license to operate, but particularly I think for African miners, and it's a key area of focus, and we believe increasingly a competitive advantage. One factor is obviously the focus on sustainability driven by the investment community. But even our ability to manage that is intrinsically linked with the focus we have on local communities and stakeholder management and environmental custodianship. So one of the reasons you're seeing an improvement in our published information is the ability to capture what we're already doing across the business, in our local communities, in the development of our workforce, in the management of our environmental outcomes. This company won, you know, global awards for the rehabilitation program we did in Tanzania on the Golden Pride mine. We want to improve what we're doing on the ground, and we want to be able to show that to investors and governments and stakeholders.
Of course, the greatest ESG risk and the greatest risk to all of us at the moment is the COVID-19 pandemic and how we react to it. I'm sure there's sensitivities in your African operations in particular. Have you identified where the greatest risk areas are for both your operations, your people, and also the host communities in which you operate?
You know, in the 15 years that we've been operating in Mali, and the more than 10 years that we've been continuously pouring gold at Syama, we have operated that asset during a coup d'etat where you know, the war for the country was completely disrupted. We're operating in an environment where the north of Mali is a complete no-go zone with you know, a war running as we speak, effectively. And we operated continuously during the Ebola crisis, all of which has prepared us for the unprecedented scenario of COVID-19. But the number one risk that we should talk about first, and the one we focused on first, is the risk to our people. Clearly, this is a disease, and it's a dangerous disease, and we want to make sure that we're controlling the risk to our people and looking after them. And that's the number one driver of our response. Then there are a whole lot of downstream risks to our ability to actually transport gold and get credit for it, to actually get it off site in an environment where global aviation has been restricted, as well as our supply lines for fuel and reagents and important parts. And then there's the transit of our expatriates and the whole cascading series of risks. So our experience with somewhat similar situations allowed us to react quite quickly, and we continue to have a crisis management team meeting on a daily basis. The strength of our position is both of our African operating mines are in very remote locations. And for some time, one of our approaches to regional security is we operate those mines very much as an isolated bubble. And we control entry and exit already, and we're somewhat removed. So at the moment, you know, I'm comfortable, and that's why we've confirmed guidance. I do think from an African perspective, the story of COVID-19 has not yet been told. And we're watching very closely the way governments react and the way the disease progresses. You know, we've got young populations in Africa and very hot climates, but then also, so that, you know, that may influence a more positive scenario. Equally, though, you have obviously far less available healthcare options in the African continent, low socioeconomic indexes, lots of overcrowding. So, there's an untold story about how and where the disease develops, as we have seen around the world.
John, thanks very much for your time today. It's been great chatting, and it's good to hear that Syama's back up and getting close back to full production.
Syama's been a mine for 30 years. I am really looking forward to sustainable, consistent operations. The signs were there in the March quarterly we put out this week. And I do look forward to meeting you after we publish the June quarterly and seeing a significant improvement on that and some consistency. So thanks very much. Stay safe, Dom, and speak to you soon.